Welcome to this installment of Clarifying Tax Situations with attorney and CPA David W. Clausing.
What are some of the common warning signs that I can look for to determine if my spouse is committing financial fraud against me in my divorce? Financial fraud in divorce is an everyday common occurrence. I hate to say it, but many spouses cheat in the process of trying to cut down on the amount of spousal support they're going to have to pay, cut down on the amount of assets they're going to lose when the marital assets are split between husband and wife. And there are people out there that are willing to bend or break rules to accomplish their goals in a divorce. So here's some common warning signs you can look for to indicate whether your husband or your wife may have committed financial fraud against you during your marriage or during the divorce. The larger the number of red flags identified, the higher the likelihood that fraud may have occurred, either in the past or during the divorce itself. Many attempts at fraud during a divorce scenario are motivated by a desire, again, to minimize a property or a settlement or support obligation. Here's some examples of the types of fraud that I'm talking about. Hiding undeclared assets during a divorce. Fraudulent undervaluation of property or assets. Fraudulently understating income levels, which can be accompanied with tax fraud. While we're going through these badges of fraud, keep one thing in mind. The longer a spouse has perpetuated a fraud, unfortunately, the easier it is for them to get away with it. The more time that passes, the more difficult it can be to ascertain certain records to trace funds. In other words, a paper trail tends to disappear over time, and it becomes harder as time goes on to determine if financial fraud has occurred in your divorce or during your marriage. Here's one of the most common warning signs I've seen in my career. Look for a drastic change in the level of communication between you and your spouse. When it comes to the point of your relationship where you're no longer talking to each other, that's when you should start looking. Okay, the most common fraud perpetuated in divorce takes place during the income and expense reporting provided to the divorce court itself. That's why many high net worth folks, when they go through divorce, hire a forensic accountant to go look at this type of thing. One thing we've seen is where fraudulent tax information or tax returns have been put in front of the divorce court that may or may not have actually been filed to understate income. The most blatant types of fraud often involve asset dissipation and misappropriation of family assets, and I'm going to discuss this more in depth below. But there are other types of fraud that can come to the surface in a divorce scenario. Look for forgeries and questionable documents. Look for loan fraud. Look for insurance fraud. All right, let's get into the warning signs. If you see a flame up of old addictions or possibly new addictions, start thinking financial fraud. If you see this behavior, you should become very suspicious. You walk up on your husband, they're sitting in front of a laptop computer and they move the screen away so you can't see what they're doing. Or they're sitting at a PC and they switch the screens real quick so you can't see what they were working on. Any type of shielding of a computer screen while you're walking by could be a warning sign that something is amiss. Look for lying or deceptive behavior. Look for any action where there's an attempt to conceal the details of transactions. That should raise your suspicion level. Look for unusual cash withdrawals from bank accounts. Here's one of my favorites. Look for undisclosed loans to a friend or romantic partner that are to be repaid after the divorce is finalized. Look for this action: buying and then stashing gold, collectible art, antiques, vehicles, or any other item that retains its value over time, and then the stashing of that item. Look for your spouse to suddenly start spending significant time in another city or another country. This is almost across the board something I've seen. If your spouse is planning on divorcing you and they're anticipating a divorce in the future and they know it but they haven't told you yet, look for a sudden and drastic decline in the amount of income they're generating with the onset of marital difficulties. Now, they could still be making the same amount of money, but they could be hiding it from you and hiding it from the government. Or there are a lot of people out there that will purposely put the brakes on their business to make it less profitable so that it carries less value when the marital assets are divided up by the divorce court. If your spouse acts defensively or elusively when you ask him questions or her questions about financial matters, be suspicious. If your spouse intentionally provides incomplete responses to inquiries and divorce requests, be suspicious. Here's an overarching theme you should be thinking about. During the course of your marriage, has there been transparency and truthfulness about your finances during the marriage, and how about during the divorce? Did you and your spouse take an active role in managing the family's assets and tax filings, or did solely yourself or solely your spouse control these matters during the marriage and afterward? So, this list of warning signs should make it clear to you that hidden or unaccounted for missing assets or misrepresentation or understating of family income in a divorce are two of the most common areas of financial fraud that take place in a divorce. If these misrepresentations go uninvestigated, this can lead to a disproportionate share of the marital assets going to the fraudulent spouse. Why let someone cheat you out of what's coming to you? Here's a concept I want you to think about because it has a lot to do with your own exposure in this situation. If you and your husband or you and your wife have been living a lifestyle that's well in excess of the reported income on your tax returns. In other words, you've been living a lavish lifestyle, you've been purchasing expensive cars, planes, boats, fancy vacations, massages, gourmet dinners. All of this can add up to a picture that you're living a lifestyle beyond what your income, reported income, can reasonably be sustained. Matter of fact, this is one of the ways the government proves that tax fraud has taken place. They look at the lifestyle you've been living compared to the history of reported income. If you are living across the street from a beach in a $10 million mansion, you own a Learjet, you vacation in the south of France, and you've only been reporting $40,000 a year of income for the past 8 years, $40,000 a year for 8 years, how in the world can you have accumulated those assets and lived that lifestyle on that much income? If that's your situation, you need to be calling me before the fraud blows up during the divorce. The last thing I want you to think about is that friends and relatives can be coaxed into assisting with the concealment of marital assets. This often happens where the fraudulent spouse makes misrepresentations, lies, tells your friends and your family that you've been incurring massive amounts of debt or you've been walking away with family bank accounts. All it takes is for that fraudulent spouse to convince people that you're doing this, and they may be duped into helping the fraudulent spouse do it. How's this for an example? You have an antique car in the garage, sells it to the uncle for $1, gets it back as a gift after the divorce is finalized.